What are some of those operating models that you're seeing being successful that are driving efficiency, but very efficiency, like long-term efficiency driven ad? How do you drive growth, and how do you improve your responsiveness to brokers? Like, what would that look like?
One thing that is exciting about the Lloyd's market is a very old market, in the sense of, if you go in the Lloyd's building, you see a number of very interesting rooms, and the underwriting room is in there for several years. The counter side of that is that at times this has remained a people-based, a relationship-based business, which is what makes the market different. At the same time, though, the other side of this coin is that processes at times have not been optimized, have not been looked at for years, and the tools provided to the underwriters are not what they should be if you were to set up a new insurer from scratch in 2026. Therefore, the example that I was going to give is, we have clients who are now looking into not what individual tools, not what process needs to be changed, but take the full domain of underwriting, from receiving the quote to issuing the policy, and rethink about the operating model. By operating model in this sense, the combination of the customer experience, or in this case, the customer as in the broker that is involved on the other side. It's thinking about holistically about what is the process that we expect to deliver. Think about what is the workflow, and by workflow, what activities needs to be done. And then crucially, we say, who needs to do these activities? Because in the past, we would have said, well, this is a underwriting task. In the new world where we have agents, we have automations, we have tools, and we have expertise with underwriters, I think we need to think about workflows in a very different way, particularly who needs to do what activities. And so by looking into the full stack, from the customer experience to the processes to the underlying workflow, and obviously what technology and talent needs to do in order to support that customer experience, and doing that holistically, some of the leaders are thinking about this in a different way, but of course the full market needs to go through transformation to achieve that.
And would you agree with the view, because as you said, it's like, I think it sounds like at the core of your point of view is a segmented operating model where it's clear like what needs to be done and who should do each of the activities. But even that, I would assume, will evolve for the next 5-10 years, right? You can expect agents doing more and more, like AI agents over time, and then the expertise being deployed in specific areas. So when you talk to some of your clients, is the advice you should first define a digital first workflow? So the actual workflow itself, even if many of the steps are still being done by humans. I think once you've got a digital workflow where you have control over which activities are being done by humans versus by AI, then you can then really transform that operating model over time without having to drive all the change management.
I think segmentation, it's an important concept in different ways. So first of all, the characteristics of this market is very diverse. So you would have very complex risks, but also in some cases you have very simple risks. So the segmentation in terms of really understanding what different business you're dealing with, and therefore there are different approaches to deal with different classes of different types of risk. And then there is the segmentation within a class of business to understand really who needs to do what within a given submission. That is crucial. I'm not sure if I would frame it as digital first workflow. I would say, look at the workflow in its entirety. Of course, digital has to be the way you treat, simple risks, simpler activities. I think the most important element is to recognize where do you inject expertise, where do you have to inject expertise, but actually you need to inject agents or automation, where you need to inject, straight through processing and digital. So in a way, digital is one of the considerations in what it is a multifaceted operating model, from uber expertise to absolutely no touch and zero ops operating model.
Ultimately, our perspective and the perspective of the market for a long time has been that he or she who controls the customer ultimately wins and gains the most economic rent. That is changing a little bit as we think about AI, and I think it's incumbent on the insurance brokerage channel to embrace AI to stay relevant. The agents still control that relationship today with the ultimate insured, and so we're looking at that retention rate as the leading indicator of whether there's going to be massive disruption in the industry. U.S. market, I think complexity is your friend if you're an insurance broker. So I think the more specialized the risk, the more complicated it is, the more it requires advice and analytics to make that placement. I think there are some moats around those businesses. Clearly, personal lines where there's more discussion of comparative raters that will allow you to transact more quickly. Is more exposed. Agentic AI tools will help certain discrete tasks. It should enhance account rounding. It should enhance the ability to figure out which markets want a certain type of risk. It should build a brand in insurance. So the agent's function is to go from one to many and to find the right market appetite. In the US, at least, there's only one large carrier that has built both a direct to consumer brand and a brand that intervention. It will automate renewals. So there are a bunch of discrete tasks that will be automated that are currently embedded. These capabilities are getting embedded into the workflows and the BMS, the broker management software systems that the agents use. Ultimately, we go back to risk, climate, all the things that are quite prevalent in today's world, unfortunately. Yeah, I think it goes back to a couple of the fundamental tenets. Defend your book. That's the demonstration that you're adding value. So really double down on. You go back to a couple of fundamental tenets that make insurance brokerage interesting, and the brokers will have to double down on these tenets. So that AI is an enhancer, an enabler, and not something that disintermediates them. Number one, it's the regulatory risk and all the compliance that goes into placing insurance. Insurance is complicated. There are 50 state regulators in the U.S., and there is both admitted and non-admitted. I think that's a barrier to entry, and that will enhance the complexity. There is the variable cost of distribution. That's something that the agentic AI. I'm not sure the big LLMs will want to own that risk. So I think you'll probably have a couple of situations where something breaks down.
We've seen what many have referred to as the SaaS apocalypse. This has been across industries, but also in insurance. I think the rationale behind it is, okay, you could see AI first entrants lowering switching costs and compressing margins for traditional players. You've got a number of those traditional players in your portfolio. Like, what's your advice or your coaching to those portfolio companies on how to compete with them?
First and foremost, it's about developing the capabilities to introduce and to roll out AI tools internally. So it's first and foremost, it's about efficiencies internally to be able to withstand any pressure. So medium term, short to medium term, there should be a very significant cost takeout opportunity. Whether people exercise it or whether it's a redundancy in the short term is a big question mark. So being able to build that muscle so that if there is pressure on the top line, which longer term you would expect commission rates to perhaps be under pressure if AI is widely adopted, is the number one source of advice, along with make sure you retain your business. The beauty of commercial lines insurance brokerage is on an account basis, you are retaining 90 to 95% of your accounts. And hopefully you're on the higher end if you're specialized. So focus on retaining your business, defend what you have while introducing AI capabilities into your workflow that over time could drive down costs. The public broker I was referencing had some amazing stats. So if you think about an insurance broker with 55% of their of their revenues represented in people costs. This broker cited that there could be a 20% reduction in the customer service capabilities. So if you think that's 20% of the revenue, that's a 4 to 6 in margin, or ability to kind of sustain pressure on the top line, and a 10 to 15% reduction in the support side. Support could be another 10 to 15%. So there's another 1 or 2 service capabilities. So if you think that's 20% of the revenue, that's a 4 to 6% improvement in margin, or ability to kind of sustain pressure on the top line.
I want to focus on talent now, right? And we've been talking about the shortage of talent in the industry, about there's some stats around in the next 5-10 years, 30% of the underwriters or the brokers will retire. There's not enough new joiners. What are your views on what's going to be the impact of AI on that? Is AI going to kill the entry jobs, and then we have a bigger issue 10 years down the line?
I'm actually much more optimistic. There is an enormous amount of quote unquote tribal knowledge in insurance, and it's a graying industry. I can say that as somebody who's gray. And so you do have, you are trying to bring in new talent into the industry quickly, because you do have individuals who are going to be retiring over the next 5, 10, 15 years. And so what we're seeing in some of our more forward-leaning insurance brokers are AI co-workers who are getting trained by the more seasoned practitioners, the industry specialists, individuals who understand bedding a lot of that knowledge and information into a coworker, and that coworker will really accelerate the ramp up of new hires. So if you're bringing somebody who's empathetic, who's a good salesperson, who understands how to interact with people and socialize with people, but he or she may not have the industry expertise, you're going to be able to get them up to speed much, much faster. They'll have more usable tools to learn, the specifics around different types of risk placements or different types of industries. And I think that will be a net positive for hiring, for essentially ramping up and validating what are called newbies.
Probably a couple of years ago, people would think, okay, to digitize that transfer of risk, okay, all I need to do is take that email submission from the broker, extract the data, evaluate it. And I think it's much more nuanced than that, right? Like, what would you say are the different elements that actually are required to consider when digitizing risk?
We all operate in a crisscrossing set of contexts as people. We're thinking about what session should we go to at this conference. We're thinking, what are we going to have for dinner? We're thinking about what we're going to do for Valentine's. Different kind of layers of context and different time horizons. And that's also exactly how I think underwriters ultimately and brokers are operating too. So the broker's kind of thinking, how do I actually send out this submission for a quote? They're thinking, do I have a particular deal with an insurer? Or the insurer might be thinking, I have a particular strategic deal with this broker, which is slightly more medium-term context. For example, they might be doing a book roll or a book transfer, part of this overall agreement that I'm doing with Acrisure or Harble or someone else. They're then thinking about the strategic importance of that particular broker in the context of the entire firm. So maybe the individual risk might not be an appetite, but the overall importance of that broker to the insurer is such that overrides the lack of appetite fit of the individual submission. So you have this crisscrossing intermingling of these different points of context, which means underwriters are really vital to fuse that context together so they can situate the risk submission in that context.
I think we'll see some of our most forward-thinking clients asking for things like, hey, as you're doing risk digitization, can you also do data mining on the Slack communications between the broker and the insurer? And it's exactly to capture some of that other context, right? So do you see that, you're talking about those three layers of context, do you see that enduring? Do you see that changing over time?
Yeah, so the one of the things we recently, or not recently, we're kind of way back in time, probably at Saitoro, our first partnership was with Excel Catlin back in the day, and I remember one of the learnings I had in that partnership was, I think someone at Excel Catlin said the client never wakes up in the morning thinking about buying insurance. And it's I think, very deep truth. And I'm not saying a risk manager of a very large organization would not think about insurance. Of course they would. But in general, it's a bit different from other industries like banking, for example, where there's a bit more want, a bit more will of the customer ultimately to go and optimize and improve how they're sending money, or that they might open a new bank account, they might have multiple bank accounts. In insurance, people tend not to want to think about risk. And that's normal, simply because people don't want to think about bad things that will happen to them. As humans, we repress and we try to displace these thoughts. So that means ultimately agencies and brokers, they have to do a lot of sales ultimately to win clients. They have to put a lot of work into building these high trust relationships. That means that the dominant time goes with building the relationship, not gathering the data. Gathering the data is really the derivative of the relationship. And as an agent or broker, you're wanting to do a lot of face-to-face. That's why you'll be walking around, you'll be having in-person meetings. That's why a lot of these risk submissions are handwritten, because you're ultimately having a conversation and then frantically jotting down the information you have about risk. To grow your agency, it's not easy to grow your agency. So you ultimately have to work extremely hard on winning new clients. That means when existing risks are renewed, often the data can be out of date. That's maybe because the client doesn't respond and say, hey, here's the new information. So it's actually pretty tough as a broker to update information when a client is changing year on year. And that means once the insurer receives a submission, it's going to be highly imperfect, right? And it's going to not be complete, and the information won't always be accurate. I don't think any of that will change. Simply the party upstream doesn't care about the quality of the data, the party downstream does. And that dynamic, I think, is always going to be inherent within insurance.
We used to say in life you have to plant a tree, have a child, and write a book. And now the fourth thing is join and making risk flow. So I think you've got most of them now done. So well done. And so perhaps let's jump straight into a kind of a zoomed out view of, I mean, we've been talking about the risk digitization for a number of years now. Let's start with like what's worked well and what hasn't. Like what have been the successes and the shortcomings of risk digitization?
Yeah, if I think back to when we started work on, what we call the Saitoro platform today, the whole industry, I think, was at sort of ground zero. I was new to insurance 6.5 years ago, and I had to kind of learn sort of very quickly about the dynamics in the industry. There's some very systemic factors which really impact the types of solutions which you can bring to market. And the industry had really been trying to achieve this concept of risk digitization for many years. So many verticals, many industries had gone digital, but risk, and in particular commercial risk, had really struggled to do that. And one of the kind of initial lessons that we had was that almost all of the solutions that the market had attempted required significant behavioral change on the part of market participants, and in particular where risk is sourced from. And that was really kind of the big challenge that the industry faced. So there's a lot of demand for going digital, but really a lot of struggles in terms of achieving it. So one of the foundational design principles of the platform is, look, if we're going to make this successful, we have to achieve risk digitization without any behavioral change, particularly for where the risk is sourced from. And that's kind of flowed the whole way through. So when we looked at it from that perspective, what we found was that there was a foundational problem to solve, that risk information was transferred into carriers in a format which we described as being analog. So email-based document format, Excel, PDFs, Words, PowerPoints, handwritten documents, scanned images of things. And this is what we now term the intake. And the big challenge for carriers is that they receive stuff that in the intake that they're not in control of. So for the first few years of the platform, we really focused on solving this foundational problem of taking unstructured data and harmonizing it to a structured digital format. So at the end of that, you get a digital risk object or a digital risk packet. And one of the other interesting things that we also found is that when you try to make things digital, one of the things that you're most tempted to do at the start is to try and drive standardization. So you think, well, wouldn't it be amazing if everybody just submitted the same risk information? Wouldn't it be amazing if all of the carriers just required exactly the same risk information? And even if we could only do it on one side of the market, even on the carrier side, like that would actually make things a lot easier for us. And so that was probably like the first few weeks of kind of discussions in the product team 6 years ago. And then what I realized was that actually this source of differentiation between carriers is actually their source of competitive differentiation. And that's not only important for the carriers themselves, but it's also really important for the end insured. I had an anecdote that really stuck in my mind when we were dealing with an MGA that focused on specialist risks, and they underwrote paper mills. And there was obviously whole market insurers, and they would completely decline all paper mill risks. But this MGA had a way of, through, I think actually interestingly, like employee reviews on the internet and things like this, of identifying really well-run paper mills. And so this kind of concept of differential data, differential schemas really hit home to me as being really important for the industry and for the end insured. And so those have really driven kind of what we've done from a risk digitization perspective. And as you know, that the centrality of the platform is based upon a schema. So you can define your own output data structure, and we harmonize this unstructured data into a format that you've defined. And it can be completely custom for every individual line of business, for every individual carrier. And in terms of the benefits that we saw there, probably three main benefits, I would say. A huge uplift in capacity. So when we came into kind of work on the product, a lot of time and effort was spent on basically administrative type activities before you get to the underwriting stage. So often we work in what we call the pre-underwriting phase. And to my amazement, when I first went into the industry, like the figures people quoted were, I receive 1,000 submissions every month, and I only get back to 500 of them. Literally only 500 receive a response. I don't even look at the other 500. And of course, the issue is compounded because within those 500, you might have 400 which are fantastic risks that you want to write, or it could be the reverse of that, or the 400 you really want to write when the 500 you don't get to. So that was kind of number one. I guess the sort of breakthrough period for us in terms of the ability to deliver on our long-term vision was the advent of large language models. And I think even my wife, who's a nurse in the NHS, has used a large language model now. So they become ubiquitous. But anybody who's used a large language model will have experienced this concept of statelessness. So if you just interact with a large language model by default and you have a conversation with it today, you say, send me some hotels from Mexico. And then you come back the next day and start a new conversation. And you say, well, you remember those those hotels in Mexico that we're looking at, that the LLM doesn't have any concept of the fact that you had that previous conversation. And the same happens in risk digitization. So if I send you an email today in what we call digitize, which is our core service, which allows you to create a schema or a config and send it unstructured data that gets harmonized to that schema. If I send an email into digitize today that says, hey, Juan, I've got a cyber risk, great business, $10 million revenue, online gambling business, XYZ. I'll send you the loss run information tomorrow, and you need that loss run information to complete your schema. What you get from an output, similar to how you would prompt and get a response from a large language model, is a partially completed, basically, risk object. And then if you follow up on your promise tomorrow and say, oh, hey, Sam, here's that loss information which I sent you, and maybe you've sent it on a different channel. You've created a completely new email thread, not necessarily replied to the one you sent yesterday. What you end up with is another partially completed risk object with the loss information. And the system, because it's stateless, doesn't know that these two things relate to each other. So what does that mean from a challenge perspective? It means that there has to be some other thing that does the orchestration that basically merges these two things together. So you obviously get the benefits that you don't have to read the email, copy the information out and rekey it into multiple systems, but you do have to do a lot of orchestration to basically merge the data into the object which you need, which in this case is a submission.
Understood. Yeah. And I think that those three, that's probably quite consistent every time too. Of the concept of or a bit more of the concept of what stateless means. So this sounds very much like the concept of agentic AI, right? Versus just like pure LLM, the use of LLMs. Is this right?
Absolutely, yeah. It very much follows the path over the last couple of years, although obviously things are moving at a greater speed. And actually, interestingly, one of the insights here is that in the early days, I would say 2 years ago, we used to get a lot of questions, right, about which LLMs do you use? Are you fine tuning them? And is it Gemini? Is it GPT? Is it XYZ? And now a lot of those conversations have largely gone away, and I think it's because basically the models are the foundational models are basically as good as they need to be, right, to unlock the use cases that we want to deliver on. So there's much focus on the capabilities of the models. What does that mean? It means that the focus is moved to the application level, which is where we're focused on. And so when we talk about agentic AI, a lot of that is leveraging the capabilities of the foundational models, but building an application layer around it to deliver on basically a promise of automation by default or an always on kind of concept, right? So as opposed to LLMs in their raw format 2 years ago, where they were there and you basically get prompt and response and then you kind of decide what to do next, you can really deliver on this promise that you have this autonomous flow of processes and then human oversight or human intervention when needed. And that's basically loosely described as agentic AI. And I think one of the key enablers for agentic AI systems is the ability for agents to basically undertake actions on an ongoing basis on the same thing, is a concept that the industry generally refers to as memory. So these LLMs remember or have memory inbuilt into them. But obviously, if you want to kind of like maintain a stateful workflow, it needs to have this concept of memory. And there are obviously like many solutions out there in the market, but in domains like insurance, there's obviously a need for a vertical specific implementation of that.
Understood. So give us perhaps a couple of examples of what are the applications or use cases of how carriers and brokers are using these capabilities to unlock the next area of value.
I think there's probably two things. The most obvious area is to be able to replace the human orchestration which happens today with something that the system does on an autonomous fashion. So if you think about today, when you have this schema or this configuration, this is all of the data which you need to underwrite a particular risk. So when you come into Cytora and you say, well, we want to go live in business auto, we sit down with you and we say, okay, what are the data points which you need in order to basically get through that pre-underwriting phase and get to a position where you can make a decision as an underwriter? And once you've done that, we know what the target is. So with agentic AI, what you can do is every time you receive a communication in the intake, in this case from an agent or a broker, you can obviously evaluate the completeness of the schema versus the input. So earlier when I said, well, there's 40% of cases in this cyber line of business for this US carrier where there's missing information, the platform knows that. Because it has this concept of memory or state, it can actually automate the back and forth to the broker. So what you could do is you could actually allow the agent to draft and send the email to the broker, say, look, thanks for submitting this risk information. We just need these other couple of data points in order to be able to provide you with a decision. And if you think about it, that can happen in real time without waiting for that orchestration to happen. You could receive a response back maybe in minutes. And because you have this concept of state, we know, hang on a minute, we've already received an email for this submission. We have a submission in the system. We can link it, extract the new information and update the risk object. And so in many cases, carriers will be able to automate that back and forth.
Just on that one, Sam, because this is something obviously underwriters and operations teams complain quite a lot. It's like, well, there's always something missing. They have to check the completeness of what they've received. Even if it's in digital form already, send back an email back to the broker. It takes effort and time. Do you also see in a scenario where this is happening in both sides, on the broker side and the carrier side, and that what we're talking about, that back and forth is almost being done agentically? Sorry, I might be jumping ahead here.
We always sort of have this sort of situation whereby, you know, we get really excited about the technology, and then obviously the industry needs to catch up. But Of course, the interesting thing is, there are obviously two sides to the value chain in this particular instance. Obviously, that this could be going from insurers to reinsurers, but we're talking about agent brokers into carriers. And actually, many of the same issues which happen on the carrier side also exhibit themselves on the broker side. So, for example, they have an intake which largely they're not in control of from their end insureds, for example. They would obviously complain about lack of visibility into what's happening on the carrier side. And of course, as probably most listeners know, we were acquired by Applied Systems last September. And one of the things that I was most excited about was the ability to deliver on our long-term vision, because we've really been trying to solve this problem of frictionless risk transfer on just one side of the market. And so if you imagine everything that I've described in terms of agentic AI on the carrier side also could happen, and brokers are rapidly moving towards this end state as well. And so actually, I think the big takeaway for me in the last 6 months is I live and breathe this technology every day. But even for me, like, the pace of change has been like surprisingly quick. And so it is not sci-fi anymore to imagine that you're going to have an AI agent on the broker side, so maybe sitting in the AMS, transacting with an AI agent on the carrier side, and obviously having human oversight.
So you touched there on how AI is kind of to some extent leveling the playing field for small agencies in terms of customer acquisition. You talk about like social media or outreach, which is obviously that is the growth driver of a small agency. I think that the second dimension I always think about when I think about small agencies is the day-to-day work, right? So quite often they don't have the most advanced systems. It's very manual. Are you seeing progress in that sense too, of like small agencies using AI to avoid having to fill out accord forms and 200 fields?
That's where the AI is less hype and more reality. That is one of the best use cases really for AI for the agent, not replacing the agent, replacing the agent's chores, their day-to-day tasks, right? And that is having an impact on things like hiring and how many people you need in your agency. But yeah, for sure, there's a ton of models out there that you just drop in, all the company's information. It'll pull from accord forms, from PDFs, from emails, from voice recordings or whatever, everything you've recorded in a meeting with a client, and spit out an answer very quickly, something that might have taken hours or several people or support staff to do, is now commoditized into a software package. And people can use that who are not computer people, who are not IT people. They just, because they're talking to it like a real person, they're like, hey, show me that coverage we did for Bob's bowling alley, and then it can spit out the answer. That is real. That has happened, and that's probably that's where the excitement is. When agents are excited about AI, it's because it's replacing things like that: the claims, the underwriting, the back and forth, with the client, with the carrier. Like, oh, I need more information on this. That friction has been solved to a large part.
And it also, what I see is there used to be this old maxim: you can have 2 out of 3 of good, fast, and cheap, right? Now you really can have all 3, because, all the insurance policies are going to be good. Pricing, is going to be somewhat competitive, but that speed component has always been, I think, where the devil in the details meet up, right? So if you are able to get your client a quote faster or information faster or whatever it is, faster, especially ahead of another competitor, boy, that just makes that old maxim, you can only have 2 out of the 3, it throws that right out the window, right? And from a customer experience perspective, you're going to overjoy your customers if you're giving them wicked fast service with a competitive price quote, with a great product. And insurance is complicated as all get out. And as Drake started off, we are not the insurance experts. Like, we know a little bit about insurance, but emphasis on a little bit. With the complexity that's involved with insurance, I still don't think there's going to be a tech solution, that will disintermediate the human touch, right? Because when you use insurance, something has happened. Like you think about the claims part of it, like buying it is one thing. But when insurance really comes into play is when a claim happens, when you've had your house flooded, when a tree falls on your house, when someone dies and you need to, get the benefits of that life insurance policy, or when you're trying to figure out your annuity savings plan and wealth management plan, you need to talk to someone. You need to be eyeball to eyeball, face to face for someone who understands the complexity, who's lived through it, who can talk about, hey, this is what we did with someone else in a similar situation. That provides a level of calm that no computer, no humanoid, whatever you want to call it, will ever be able to really provide, I think.
And ultimately, that is the AI promise, right? It's like, how can it do the more mechanical work for you, the kind of the marketing, or probably mechanical is not the right word, but like, how can it do some of the work for you, like outreach, marketing, kind of the day-to-day paperwork, so that you free up your team's time to really have those face-to-face conversations with the clients. And I think this is probably particularly important in that kind of small agency who's like serving small local businesses.
Yeah, because they most agents, are people, they're relationship people. They're small business owners in their community. They didn't get into that business to spend their life reading through accord forms. I don't think it's particularly, contrarian to believe that, what survives in the world of AI, in the age of AI, is the human moat, right? And I think that's what a lot of the conversations at conferences that I go to talk about. We're not and it's good for us as conference organizers, right? We used to be worried that, when everyone figures out they can do stuff on Zoom, they're not going to come to conferences. Actually, the opposite happened, right? When you live in a world where information is free and the half-life is a day, and the how to do something is not important, what survives? Human relationships. And I don't think that's particularly not nostalgic way of thinking about it, but I think the agent, why haven't real estate agents gone away? Because when I buy a house, that's an emotionally complex transaction. And I want to talk to a human. I maybe don't trust, if it was all done by a bot, there's some suspicion around this kind of black box approach where I'm trusting an algorithm to give me the best thing. I want Juan on the other end to walk me through it. And it's the same with insurance. It's an industry built on trust, where insurance is sold, not bought. And if I have, Bob's Bowling Alley in Topeka, Kansas, that kind of commercial transaction, I still want to talk to a human, maybe one whose kids go to the same school as my kids in my town. That still is that's not going away, because that's hardwired in our brains, evolutionarily speaking. It might not be the same for standard auto, or like contents insurance, something like that has kind of been commodified to an extent. That was the first wave of kind of insurtechs, lemonades. I want to do that on my phone. Don't want to talk to Juan about that. But for my business, for the big things, for the complex things where the agent acts as an advisor, more than just a transactional agent, it isn't going away anytime soon.
We've focused quite a lot so far on the how can AI drive benefit in let's think about it as the internal processes, right? So how do small agencies, or even if we zoom out and think about all segments of the market, how can carriers, brokers, agencies automate some of the internal work? But again, if you zoom out, a lot of the friction in the industry is around how risk gets transferred from the insured to the agency, to the broker, to the carrier, to the reinsurer, right? Because that is what actually drives a lot of inefficiencies, expense ratio, and ultimately kind of a worse outcome for the client. How much are you seeing in terms of AI in the actual distribution? So how do agencies communicate with insurance companies, or how are you seeing more of that or not?
Personally, I'm not. I've heard some of it. For example, our partners in the event are Viewpoint Ventures. They're very bullish on their VC firm. Drew Aldrich used to be with AmFam Ventures and AXA Ventures, and Ori Ben Ishai was with Chubb as a CMO. So they talk about their whole thesis is around distribution in insurance, and that's where they make their investments. So yeah, like folks like that are telling us that, to your point, yeah, it's not only, from carrier to or agent or broker to customer, but it's also happening the other way from, like the broker back upstream to the carrier or reinsurer, or from the MGA to the reinsurer. Yeah, we haven't, I don't think Drake and I have seen a whole lot of that. It bubbles up in conversations.
No, I think this is where I get to the end of my technical expertise, right? I'm a conference guy. I'm an agent whisperer. I only know what they talk about, and but it's one, that's why we have a show, right? That's why there's 700 exhibitors. You got to come to these things and then check out all these companies.